Hey ladies and gentlemen, this is John White here with you again. Hopefully by now you've had some time to look around the website and learn a little bit about me and a little bit more about some of the types of strategies I like to teach here at BetterTrades. So what I want to do today is I'm going to take a little bit of time and go through and do a review of some of the strategies we like to use with our practice trading, and also tell you some information on how you can learn more about this particular type of trading. What we have here is a very familiar trade that a lot of you have seen before, and we looked at several of these in the past. This is another iron condor, and keep in mind all we did here is we sold premium on each side of the market. Everything that I do in the trading that I teach here with BetterTrades, it all involves selling premium. So whether you're learning this type of trading from the Spread the Wealth DVDs or you're following along with the market insights, we are always going to be selling premium. And when I say selling premium, what I mean by that is we like to put trades on that when we place the orders for the positions, we actually get paid a credit to be in that position. So what we have here is we have a call spread that we sold up top, and all we did here is we sold a 12.20 call, and we collect a certain amount of premium for that, and then we also bought a 12.30 call as insurance. Now that call spread that we sold up there at 12.20, 12.30, that brought in 60 cents in credit, 60 cents in premium, and what needs to happen now is the market very simply needs to stay somewhere below 12.20. As long as the market stays below 12.20, that call spread will expire and we'll keep all that premium that we brought in. The same thing on the put side. What we did down here is we sold a 10.70 put, and then we bought a 10.60 put as the insurance on that put spread, and we also collect another 60 cents premium on the put spread side. And what we want to happen here in this example is that we want the market to stay above 10.70, above the put option we sold. So in my Spread the Wealth DVDs, what we actually do there is I go through and explain everything you need to know about this particular type of trading with using these iron condors. And we start from the products that I like to trade and teach about trading, and go into how do we pick the strikes, what do we look for as far as the delta, how much time out do we like to get, what kind of premium do we like to sell. I basically go through all the ins and outs that you need to know about trading iron condors and selling premium in this manner. And in addition to that, in those DVDs, what we also cover is how do you protect yourself. For example, if the market started going down, if it started right here at 1066 and it started just tanking day after day after day, it got down here too far, how do you protect that put spread? On the upside, the same thing. What if the market starts coming up really quick and just starts going up too far? How do you protect that call spread? That's something we go into in detail in the Spread the Wealth DVDs, are adjustments and counter moves to hedge yourself should the market go too far up or too far down. Now if the market just goes sideways here like it did in this example, we have nothing to worry about. We just let both trades expire out of the money, and we keep that $1.20 premium we brought in back when those trades were first sold, back on this day right here. So we look over here on expiration day on the 12th, just a few days ago, and we see that the market expired down here at 10:52, and both of our trades went out of the money worthless. So there was really nothing to do on this particular trade. But if you're going to go out and learn to trade these things, you have to know how to protect yourself should the market go too far up or too far down, because that does sometimes happen. So that's one way you can learn this type of trading, is from those DVDs. Now some of the other examples we went through are things like this right here with this broken wing butterfly, and I'll just do a quick recap of this and show you a little bit about this type of trade. What we did here with this broken wing butterfly is we bought, and again this is our entrance point right here where this vertical blue line is, this first blue line, and this is expiration for this particular option right here on the 12th of December. And what we did over here is we bought a 2010 put option, and let's just use a one contract example. We bought a 2010 put option, and then we sold two 1990 put options. All right, and that's the body of the butterfly right there at 1990. And then we also came a little further out of the money. We came 30 points down, and we bought a 1960 put option, and we put this broken wing butterfly on for a 10-cent credit. So what's really nice about this is when the market's right up in this area here at 2054 or so, If the market stays up there between now and expiration, or if it goes up and this butterfly just expires out of the money, we haven't really lost anything because we put it on for a credit. We'll actually get to keep that 10 cents credit. It's not much, but at least we didn't lose a debit that we paid for the trade. So the market pays us 10 cents, and if the thing expires worthless, no big deal. We haven't lost anything. We haven't really made much, only 10 cents, but we haven't really lost anything. But the great thing about these types of trades like this broken wing butterfly, when we do these things in the Market Insights, we'll go over all the ins and outs of how to place them, how to manage them, what to look for when you're trying to get into a trade, what to look for when you're trying to manage a trade or get out of it. And something really great about these types of positions, if you look what happened here, the market actually eventually came down and it went below the put that we bought. You see that, the 2010 put that we own as part of that butterfly? The market came down below that, down to 2002.33. So what happened there is that put that we bought, that 2010 put, we got to cash that thing out on this practice trade for a profit of exactly $7.67. And the way I'm getting that is that's how far the 2010 put is in the money on expiration. If the market finishes over here at 2002.33, the 2010 put that we own, remember we own that as part of that butterfly, and that thing is exactly $7.67 in the money. So we get to cash that one put, that 2010 put out for that amount, and everything else here, the 1990 puts that we sold and the 1960 put that we bought, those expire worthless out of the money. No reason to even worry about those. But what we did here on this particular trade, if you think about it this way, we put the trade on for a credit. We got paid a small credit of 10 cents to put the trade on, and we took the trade off for a much larger credit of $7.67 by that 2010 put expiring in the money. Now, does that always happen exactly like that? No, it doesn't. But what's really nice about these types of trades is that they are positive theta. They bleed value in your favor. So even if the market stayed up in this area here, we would have seen this trade eventually open up and given us some nice profit on this practice position. All right. So these are some of the types of trades we do in the Market Insights. Week after week, month after month, we're constantly doing these types of butterflies and different variations of these, and we can actually combine this type of position with other things like those vertical spreads we saw over in the iron condor just a few moments ago. All right, we might put on a broken wing butterfly like this in the Market Insights and then come up here and sell a call spread up above it, just like we did here on the Russell. Just sell a call spread here on the SPX up in this area and take in more premium. So there's endless combinations and choices we have when trading these types of trades, and that's what's really nice about following along with those Market Insights, is that I update those at least twice a week as a minimum, at least 2 times a week, and we put practice trades on just like this constantly, and every time I update I'll go through and say, hey folks, let's go through and manage this trade. The market has come down on us. Here's how we're going to manage it. Or the market's gone up. Here's what we're going to do to manage this trade. That is, in my opinion, the best tool you could have are those Market Insights to follow along and practice along with me on these types of trading just like this. All right? So lots and lots of stuff to learn. And don't forget, one more thing you can do, if you're interested in all of this type of trading and you want to take advantage of all of it, you can get the Platinum package. That includes those Spread the Wealth DVDs that focus strictly on trading the iron condors we looked at a few moments ago, and then all the other stuff that we practice in the Market Insights. You'll get a quarter of the Market Insights along with that, and then there's some other DVD sets you can choose from on some different types of strangles and other types of butterflies that you can take advantage of also. But that's all in the Platinum package together, and you can contact BetterTrades about that. All right, folks, that's all I have here for you today. I hope you all have enjoyed this and really learned a lot from it, and I look forward to hearing from you all in the future. Everyone have a great day. Bye-bye.